December is a good time to reflect. Looking back to 2024, U.S. GDP is expected to have grown 2.7%, much better than expected. Our $1.8 trillion deficit was good for the economy, but our debt is now over $36 trillion, with interest payments over a third of our discretionary spending. Now, the Fed has cut rates 3/4 of a point since September, with another quarter point expected next week. Market interest rates moved modestly higher this year, with the Bloomberg U.S. Aggregate Bond Index returning 2.8%. For stocks, the S&P 500 company's earnings growth is expected to be 9.6% this year, and the S&P 500 index is up about 29%. Looking to 2025, the economy is expected to grow 2.1%. Fed funds futures point to another half point in rate cuts as inflation is expected to cool further. We'll have a new administration and Congress with a renewed focus on government efficiency, the deficit, and the debt. There will be a more aggressive foreign policy approach and a push for peace in many military hotspots. Turning to stocks, S&P 500 earnings are forecast to grow next year 15%, but note, markets often trade on animal spirits. Any disappointment with the economy, earnings, or friction in D.C. could trigger increased market volatility. December is a really good time to reflect. Check out Sightlines for some thoughts on 2024 and 2025, and look for our full outlook report in early January.